Welcome back to Investing Talk Podcast.
Today we're looking at AST SpaceMobile.
As usual, before we start, subscribe, like, and comment to this video to support the show. And today we're getting into something that honestly feels a bit like science fiction.
It really does, yeah.
Right, because if you track telecom or aerospace, you know the holy grail right now is a world with literally zero cellular dead zones.
Exactly. Total coverage.
And we aren't talking about carrying a bulky satellite phone in a Pelican case or bolting some specialized dish to the roof of your car.
Right. None of that.
We're talking about the standard smartphone sitting in your pocket right now, connecting directly to a satellite hundreds of miles up.
It's a massive paradigm shift.
Yeah.
Historically, the space industry and telecom, they were basically operating in completely different universes.
Completely siloed.
Exactly. Traditional cell networks, they need vast grids of physical towers. And satellite networks needed that proprietary hardware you mentioned. Bridging that gap to let a commercial iPhone just talk to orbital infrastructure was considered technically impossible for a long time.
But those silos are coming down fast.
They really are.
And AST SpaceMobile is basically swinging the sledgehammer here. We're looking at an absolute avalanche of recent data from late 2025 and early 2026. Financials, technicals, market sentiment.
The whole picture.
Yeah. And we're trying to figure out, are they finally crossing the chasm? Moving from a speculative cash-burning space bet to an actual telecom utility. Okay, let's unpack this.
Well, the distinction between a speculative venture and a utility really just comes down to one thing: validated commercial revenue.
Right. Show me the money.
Exactly. And the recent data gives us a very clear picture of where they stand. For full year 2025, they reported $82 million in revenue.
Wow.
Yeah. It's a breakout number. It's not a theoretical projection anymore. This is their first truly significant commercial revenue stream.
And what stands out to you about that $82 million? Because it's one thing to generate revenue, but who is actually writing those checks?
The source is arguably more important than the number itself. A huge chunk of that $82 million is driven by mobile network operator prepayments.
The MNOs.
Right. Major telecom companies paying cash in advance for future network access, plus some really large government contracts.
So they're voting with their balance sheets.
Absolutely. When telecom giants open their wallets and hand over cash before a constellation is even fully deployed, that demonstrates a profound level of commercial validation.
And that momentum didn't just hold steady, right? It accelerated into the end of the year.
Significantly. If you look at the fourth quarter of 2025, they posted $54.3 million in revenue, just in Q4.
Jeez.
That single quarter figure beat market estimates by nearly 30%.
That's huge.
A beat of that magnitude forces institutional analysts to completely rewrite their models. It's a hard mathematical signal that commercial operations are actively underway.
But this is where the financials get a little baffling at first glance. We're talking about an aerospace company. They build spacecraft and shoot them into orbit on massive rockets.
Right.
Yet their projected gross margins on service revenue once the full constellation is active are expected to be over 90%.
Yes.
How does a heavy industry space company get margins that you normally only see from, like a sauce company?
It requires a complete mental pivot on how we view infrastructure. You have to understand what we call software-like satellite economics.
Okay, explain that.
Yes, the initial capital expenditure, the CapEx, is astronomical. Designing the tech, building the satellites, paying for the rockets, massive upfront costs and current net losses.
Sure.
But once that satellite is deployed and operational in orbit, the marginal cost of delivering the service is practically zero.
So it's heavily front-loaded. Compare that to a traditional terrestrial cell tower.
Think about the operating expenses of a regular network on the ground. You have land leases to renegotiate, property taxes, connections to the local power grid, backup diesel generators.
Maintenance trucks.
Exactly. Vandalism, weather damage. A satellite in orbit requires none of that. There is no rent in space. So once the fixed costs of getting it up there are absorbed, almost every new dollar of service revenue just drops straight to the bottom line.
That makes total sense. You take the massive upfront financial pain for the reward of a frictionless, high-margin revenue stream later.
Precisely.
Let's transition into the technicals and the competitive moat, because to protect a 90% margin, you need an ironclad defense so competitors don't just launch their own hardware and undercut you.
What's fascinating here is how deep and multi-layered their technological moat actually is. The foundation is a portfolio of over 3,400 patents and patent-pending claims.
Read 400.
Yeah,
Yeah.
but the real crown jewel is their highly advanced beam-forming technology, along with their ground station integration.
Okay, let's translate that for everyone listening. Beamforming is a buzzword in telecom. How are they applying it from space?
Think of a traditional satellite signal, like a regular light bulb. It broadcasts a wide, diffused cone of signal over a huge area.
So it's weak by the time it hits the ground.
Right. That's why satellite phones need those huge antennas to catch it. Beamforming is different. It's like a laser pointer. Their satellites use massive phased array antennas to dynamically focus and steer a highly concentrated beam of radio frequency directly to a tiny specific area on the ground.
So they're shooting a concentrated beta beam straight to the microantenna inside your standard smartphone,
Exactly. No specialized hardware on the user's end.
which changes the entire business dynamic.
It really does. Because it works with existing phones, they don't have to compete against terrestrial carriers. They aren't trying to steal retail customers from AT&T or Vodafone. They operate as a wholesale infrastructure provider to them.
The ultimate back-end partner. And the scale of these partnerships is staggering. They're partnered with over 45 mobile network operators globally.
The titans of the industry,
Right, and that gives them theoretical access to roughly 2.8 billion subscribers.
which solves the customer acquisition problem entirely. But those partnerships grant them something even more valuable, access to the operator's existing 850 megahertz spectrum.
Why is that specific 850 band so crucial?
It comes down to physics. High-frequency spectrum carries a lot of data, but it has terrible range. It gets blocked by rain, trees, walls.
Right.
Low-band spectrum, like 850 megahertz, is the workhorse. It travels vast distances, penetrates the atmosphere, punches right through weather and buildings. By leveraging the spectrum their partners already own, they bypass billions in government auctions and ensure their signal can actually reach your phone.
It's a brilliant maneuver. It completely boxes out traditional satellite providers trying to sell direct to consumer. Because if your current carrier just seamlessly switches you to the space network when you drive out of range without you even noticing, why would you buy a separate satellite phone?
You wouldn't.
Huh.
And as we transition into market sentiment, it's clear the market is waking up to this wholesale model.
Definitely. Look at the immediate price session after that Q4 beat.
On March 2nd, 2026, when those numbers dropped, shares surged 4.6% in after-hours trading.
That wasn't just algorithmic noise. That felt like a real psychological shift, a fundamental de-risking event.
I agree. Investors waiting on the sidelines for proof that this wasn't just a science experiment finally got the hard data.
And looking at quantitative sentiment across platforms, the mood is categorized as bullish-leaning neutral.
The neutrality mostly reflects broader macro volatility. But if you isolate it to their specific news flow, it's overwhelmingly bullish. A prime example is the reaction to the TELUS commercial agreement.
Right, the Canadian rollout. For anyone unfamiliar, Canada is one of the most brutal telecom challenges on Earth. Massive expanses of rugged wilderness. Building towers in the Yukon is economically unviable.
Digging trenches for fiber optics there is basically impossible. The TELUS deal utilizes this tech to blanket those remote regions from space. It instantly monetizes areas previously considered dead zones.
But beyond the operator deals, look at the institutional capital. Heavyweights like AT&T, Verizon, and Google made strategic investments in 2024, which were exercised in 2025.
When the largest tech and telecom companies put their own capital on your balance sheet,
Yep.
retail investors notice.
It's an enormous stamp of validation. And naturally, with Google and AT&T involved, the rumor mill is spinning. Unconfirmed M&A chatter about vertical integration.
Yes, and that mysterious initiative called Project Libra.
Oh yeah, the IoT integration rumors.
It's highly speculative, but it makes sense. If you have a global network connecting to tiny antennas, you aren't just connecting phones. You're connecting agricultural sensors, shipping containers, logistics fleets. The vision goes way beyond consumer cellular.
Okay, let's pivot to the risk profile for a second. I'll play devil's advocate. If I'm an institutional short seller, where are the structural weaknesses?
If we connect this to the bigger picture, the most glaring financial risk is the required capital expenditure. Launching a global satellite constellation is one of the most capital-intensive commercial endeavors in existence.
Right, so their current valuation relies heavily on future growth, causing an elevated price-to-sales ratio.
Exactly. But operationally, the biggest hurdle is deploying their Block 2 satellites.
Let's clarify that. Block 1 was the proof of concept, right?
Yes. Block 1 proved it works in space. Block 2 is the true commercial scale. Larger, far more powerful satellites for massive capacity. Moving from prototypes to manufacturing dozens of complex aerospace assets introduces huge supply chain risks.
If you hit a bottleneck for one microchip, the whole line halts.
And even if you build them perfectly, you have to strap millions of dollars of delicate technology to a controlled explosion.
A rocket.
Launch failure is a permanent reality in this sector. Any delays push back the timeline for those 90% margins.
Then you have macro headwinds outside their control. Escalating tensions with Iran, sudden oil spikes. These cause immediate risk-off behavior.
Highly valued, capital-intensive space stocks are usually the first to be liquidated when macro fears spike.
So how do they survive a market freeze with such massive capital requirements?
Their balance sheet is the primary mitigating factor. As of March 2026, they hold a staggering $2.1 billion in liquidity.
That is a massive shock absorber.
It gives them a fully funded runway straight through the Block 2. Block 2 launches well into 2027. They won't be forced into toxic debt just to keep the lights on if the macro environment deteriorates. Plus, many analysts argue the known supply chain and geopolitical risks are already priced in.
Okay, with the capital secured and the tech validated, let's look at the calendar. Here's where it gets really interesting, because the roadmap is aggressive.
Short term, the market is hyper-focused on the Q1 2026 earnings. Analysts want to see if that explosive Q4 momentum is sustainable.
They'll be looking for more M&O prepayments and updates on the physical TELUS rollout. But the real operational mountain is the launch cadence.
45 to 60 planned satellite launches throughout 2026 alone.
Think about the logistics. That's 1 or 2 major deployments every single month. It creates a rolling wave of news flow all year.
And that tempo is only possible because of plunging launch costs. A decade ago, launching 60 heavy satellites in a year would bankrupt almost anyone.
But reusable rockets change the economics entirely.
Right. It's no longer an insurmountable barrier. It's just a line item on a spreadsheet.
Which meets the demand for a single network future. People expect 100% coverage, whether they're in Manhattan or sailing the Pacific.
And they are positioning themselves as the invisible infrastructure layer powering that expectation.
Let's bring it to the final verdict. Synthesizing the financials, the patent moat, the institutional backing, and weighing it against the manufacturing risks.
The overarching thesis remains exceptionally strong. We're looking at a robust, bullish score of 8 out of 10. They've successfully transitioned from a speculative venture into a highly functional telecom utility.
But the data makes it clear this isn't a short-term trade.
No, it's a multi-year hold targeting the 2027 constellation completion.
So what does this all mean? It means patience is a requirement in capital-intensive disruption. You wait for the heavy lifting of deployment to finish, and then those 90% margins take over.
The true value unlocks when they stop building and start harvesting revenue from billions of captive users.
As we wrap up today's analysis, be sure to subscribe, but also I want to leave you with a provocative thought to mull over. If they can successfully deliver seamless global broadband from space directly to your phone, what happens to the trillions of dollars sunk into terrestrial cell towers?
It's a fascinating question.
What is the fate of all that concrete and steel? Over the next decade, are we witnessing the slow obsolescence of the cell tower? Think about it. Thanks for tuning in.